Yo, what's up everyone? My name is Andrew Warren, and in today's video, we have some more positive news around Tesla stock. And the interesting thing about this news piece is that not only does it involve Tesla, but it also involves Apple stock as well, which makes things even more interesting, specifically in my situation, because as you can see, Apple stock does take up a notable amount of my portfolio, about 15%, and then Tesla takes up around 80% right now. So this news piece that I will be addressing in this video is certainly not only good news for Tesla stock, but for Apple stock as well, which means it's really good news for the portfolio. So getting into this one, this once again specifically has to do with Tesla stock itself. As in previous videos, it's not like talking about job listings or recent expansions or new insurance services or wrap services like we're seeing in China. So this has really nothing to do with the actions of the company, as in like what they're doing right now. And this is more focused on analysts discussing the stock and the stock price and the potential in the future based off of this most recent stock split announcement and what could occur after the stock split. So as always, if you all do enjoy these videos, please make sure to smash that like button. It really does help me out. But just getting into this topic for today, as you all know, I've kind of drilled this over and over and over, just talking about my points on the stock split. We all understand at this point that although a stock split in theory does nothing for a company in terms of adding actual value to a position, it just makes shares cheaper. Although it doesn't add anything like that, nothing new has been added to Tesla because of a stock split. But what it does accomplish is offering more access to people who have previously not been able to have access to buying Tesla, just because as we know, with a lot of middle class people, lower middle class, lower class, a lot of these retail investors, before they can put any money into Tesla stock, a lot of those funds from their paycheck funnels into house payments, car insurance, car payments. If they have kids, you have to pay for all of those expenses as well. So there's really not much left over if you're just trying to gradually increase a position in the stock market or trying to purchase a few shares here and there. And I completely get that. I get that struggle. I understand once you're overwhelmed with expenses, it's really hard to actually get the extra money to put into something to grow your wealth when most of your money is being focused on just living your day-to-day lives and surviving. So I completely understand that, and I think that's why we've seen such a huge run-up with this stock recently, because people find value in the fact that more investors will finally have access to entering in with a position of Tesla in which they didn't have that access or ability to do so before. And this is also relevant outside of the United States as well, because now this is kind of a rumor. I don't know this is 100% fact, but I have heard that outside of the US, it's a lot more difficult to get access to fractional shares. It's not as easy as it is in the United States. So that's another thing as well, where even at that point, it has kind of like less to do with your wealth status and more to do just where you live. So that's an interesting point to note as well. But I just want to go ahead and get into this article today, and then we'll expand on it a little bit more in reference to this most recent stock split announcement. So anyways, let's go ahead and check this out. And then, like I said, I'll get into it a little bit more. So this is an article I found today, and it was actually released today at around 1 p.m. And this is by Markets Insider and author Saloni Sardana. And the article title states, Apple's and Tesla's stock splits could push them 33% higher in the next 12 months, according to an analyst who looked at 60 years of data. So with this title alone, like I said, there's not too much context on this just yet, but just judging from the title alone, this is an analyst that is referencing old data. And as we know, data doesn't lie. It's not always consistent in different situations, but you can kind of make a general comparison and infer from that what some of the possibilities could be in reference to these upcoming stock splits. So we'll get into this article just a little bit more, and I'm assuming it's going to reference back on data in which we've previously seen increases in stock price after the split actually occurs. So that'll be interesting to look at as well. So just to note a few talking points right here, of course, it addresses the title, which is what we just read. And then another direct quote states, Tesla and Apple are already two of the best performing companies on the US stock market, and all of the evidence suggests their upcoming stock splits could act as a tailwind for the value of their shares, according to Adam Vatisse, an analyst at eToro. And so these key points basically just talk about the data, the stock split and what that title actually means, but let's jump into the article where it goes a little bit more in depth on these claims to see what it actually has to say and what information backs that up. So according to this, it states a multi-asset investment platform known as eToro analyzed 60 years of data and concluded that on average, mega brands that split their stocks saw share prices surge by a third in the year after the split. So like that mentions, we're talking about a potential 33% increase in the share price of Tesla if this does follow along with the consistency that we've seen previously. And so another direct quote from this coming from that same analyst states, Tesla and Apple are already two of the best performing companies on the US stock market, and all the evidence suggests their upcoming stock splits could act as a tailwind for the value of their shares. So that's kind of what we referenced up above as well. And then another statement from him says, retail investors are increasingly engaging with the financial markets, and many see the benefit in investing in the companies who produce products they love and use daily. Tesla and Apple are two such companies. And I actually really enjoy this quote right here because it kind of just drills in what I've been saying on my videos over these past few months, in which I kind of compare the Tesla to the iPhone, in which not only is it a product of our daily lives that you would use every single day, but it's also a revolutionary product that has changed the previous market and what existed previously. You had the beginning of the iPhone era with Steve Jobs, and it came out seemingly out of nowhere, and it has forever changed your life since then because of how much you can do on an iPhone compared to what you could do on a flip phone or a BlackBerry previously. And I think that's very similar to what we're seeing with Tesla right now, where you have potential passive income opportunities in the future if full self-driving improves enough to be pretty much perfect as a replacement for manual driving. So like I said, that could change your lifestyles in completely different ways. Like with the robo-taxis, your car would be an asset in which you could get passive income while not using it. And then for another example, just addressing a competing market, Tesla would be able to have robo-taxis at a much cheaper price because of no manual drivers, and they wouldn't have to pay anyone to drive it, and people would already own them to rent them out. So Tesla would get their cut, and they would also have it vertically integrated if they wanted to supply their own cars. So because of that, we could see a big increase in the affordability of transportation compared to what we've seen previously, like Uber and Lyft. Even though Uber and Lyft, it kind of goes along with a taxi network, it was still a little bit revolutionary in the fact that it was easily accessible with iPhone apps and things like that. The interesting thing about Tesla is I think it's going to make something that's fairly new look like a product of the past after you see how cheap the prices will be with a robo-taxi transportation compared to what we've seen in the past for, like, let's say a 2-mile ride for like $7, $9 with Uber. So I love this quote and how it compares them as two great companies that offer a revolutionary product. It's very similar in that aspect, and I honestly compare Tesla a lot to Apple because of the quality of the product and how revolutionary it is inherently. And so it says that eToro analyzed the price movements of 10 of the biggest global brands that have carried out a share split in recent years, and that includes Apple, Google, Microsoft, Amazon, Coca-Cola, Disney, Samsung, McDonald's, Toyota, and Intel. And then it states Apple has split its shares 4 times in its history, with those shares rising by an average of 10.4% in the year following the split. And according to eToro, it states that there was a dramatic price movement in the 12 months after its June 2014 split, in which there was a rise of share value of around 36.4%, and that it also skyrocketed in February of 2005 after the share split of around a 58.2% increase. So we're talking about a huge increase after this split. However, keep in mind there is one scenario where it's a different situation, and that was in June of 2000 after the share split, in which Apple stock apparently dived 61%. Keep in mind it mentions that this was during the height of the dot-com crash, so I would kind of consider that one of those special situations where, of course, it was after the stock split, but it's more because of the dot-com crash rather than the actual split, which is what we're referencing here. So I think that example right there, although it's still valid in itself, I think you could conclude that that was more of to do with like the dot-com bubble crash. And so here is the really interesting thing. This is what gets me really excited. And I like that they actually broke this down in a chart where we could visually see this comparison. So this is Amazon stock, and it says number of share splits in history. And according to this is the chart right here noting the average performance of shares 12 months after the split. So the average of Amazon over 3 splits in history is 209%. I don't know about you all, but I had never really been aware of this information. It's kind of hard to find specific information like this. But that is actually really impressive when you think about an increase like that, just based off of movement after a split occurs. So that's really interesting with Amazon, and I do make comparisons with Tesla and Amazon sometimes with my videos as well. And so Microsoft is another example. It has a history of 9 splits, and the average performance of shares 12 months after the split was 47%. With Toyota, they've had 1 split, which is an average of 25% 12 months after the split. McDonald's, they've had 9 splits with an average of a 22% increase after the split. Disney with 8 splits, 18% after the increase. Intel with 6 splits, an average of 12% increase. And then Coca-Cola with 9 splits, that's an average of 11% increase after the split. Apple, that is a total of 4 splits in history. That's an average of 10% increase in the months after the split. And then you have Google, which has had 1 split so far. That's minus 6% after it. And then you have Samsung, which has had 1 split so far as well, which is minus 13%. So there are some situations where it has gone down in value, but if you really start looking at the high quality companies like Apple, Amazon, Microsoft, especially these top 2, they did very well. Apple, just a 10% gain after the split, but still, if you look at the history on Apple, it's one that's a very big performer. And so anyways, this is just some more food for thought, I guess you would call it. I think that this is good news for Tesla stock. Now, although it doesn't guarantee we're going to see a huge increase after the stock split, keep in mind that we have seen such a big run up so far prior to the split recently, but that mostly just includes investors that already had access to fractional shares or investors that just simply had the money to buy Tesla. That doesn't include all of these people that are waiting to buy it after the split when they can afford it. So I think this information is really great news, honestly, if you take a look at the history and the consistency. Now, we don't know if it will 100% apply to Tesla. There's really no like proof that it will actually happen, but I think just referencing those things, it at least gets me a little bit excited about the future and really interested to see what happens after Tesla starts trading on a split adjusted basis on Monday. So I'm really interested to see what happens on Monday and next week as well, but especially tomorrow and Friday as well, with this week being very hyped up for Tesla and Apple because of the split happening so soon. But anyways, hope you all enjoyed this video. Please make sure to smash that like button if you did. And also feel free to check out Robinhood and Webull in the description below. If you sign up with my referral link, you'll get some free stocks. And especially with Webull right now, you'll get 2 free stocks if you use my referral link and deposit $100 into your account. You can take that $100 right back out. But for doing both of those things with Webull, you'll get 2 free stocks valued up to $1,400, which is nice passive income. That's a decent opportunity for basically just free money. But hope y'all enjoyed this video, and I hope you have a fantastic rest of your week.